When Oracle reported their quarterly performance to investors, investors got some great news. The company reported great figures in revenue growth, in expectations for future quarters and future years, in remaining performance obligations, and an update on their share buyback program. Almost everything was great for investors, and you can understand why the stock price increased by as much as it did. Typically, you won't have a stock price jump by as much as 40% following an earnings announcement unless that earnings announcement was absolutely pristine. And I think for the most part, that's what investors got from Oracle in their most recent quarterly update. So I want to share with you some of these details that were so positive for Oracle stock investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Oracle mentioned that over the last 10 years, they've reduced the number of shares outstanding by 1/3, and they purchased their shares at an average price of $55, which at this point is much less than a quarter of our stock price. In fact, Oracle's current stock price is $302 per share. So Oracle reduced their shares, and by reduced, they mean that they bought back their shares. The management team used company money to buy shares from investors, and so that reduces the total number of shares in the marketplace. And the management team bought those shares at an average price of $55, and the current stock price is around $300. So that means the management team has been pretty smart in allocating capital to share buybacks. They've been buying this effectively, and they've generated a great return for investors by using investor money to buy back the company shares. So in the most recent quarter, they also repurchased shares of 440,000 for a total of $95 million. And I think management is making a point here that I don't want investors to miss. Before they say that they repurchase shares for $95 million, they say that they've been buying back shares at an average price of $55 over the previous 10 years. And I think the signal that management is trying to send here is that they think their shares are undervalued at the current market price. And I think that's always the signal, or I shouldn't say always, but I think that's the signal that investors should receive when a management team is spending money to buy back shares, because this is actual money that they're spending, right? It's not just words, right? A lot of companies will go around talking about how they think their shares are undervalued, but they don't go out and actually repurchase stock. But this management team is repurchasing and has been repurchasing stock and telling investors they think their shares are undervalued. So Oracle said that they expect they will sign additional multi-billion-dollar customers, and that remaining performance obligations will likely grow to exceed $500 billion. $500 billion in RPO. Already, they reported that the RPO in the most recently completed quarter increased by almost 360% year over year to above $400 billion, and they expect that will continue well above $500 billion in the near term. So these are the kinds of things that are driving Oracle's stock price to these levels, is the company's delivering phenomenal performance to justify the stock price increase. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street analysts. I've made this highlighted document available for my channel members, and you can join for less than $5 a month. You see the link in the description for all the membership benefits. So the management team went on to say they expect Oracle Cloud Infrastructure will grow 77% to $18 billion this year, and then increase to $32 billion the year after that, which is almost another 100% year-over-year growth, and then to $73 billion the year after that, which is more than doubling, and then to $144 billion, which is over 50% growth the year after that, and then a little over 30% growth to $144 billion for the following 4 years. That's a phenomenal growth in just a short amount of time here, from 18 billion all the way up to 144 billion in revenue that's expected over the following 4 years. And the good thing about this is that Oracle already has a lot of this expected revenue booked as remaining performance obligations, meaning these contracts are already signed. Maybe they already got a deposit from the customer, but this is already locked in. This isn't something that the company is just forecasting like in the wind, like some companies like to throw out. I'll pick on Tesla again. Tesla likes to say that their robotics business is going to be worth $10 trillion in 5 years, right? They're just throwing big numbers out there. They don't have any orders. They don't even have a finalized product. They're just throwing big numbers out there. Investors shouldn't be very confident in those forecasts. But with the forecast from Oracle, where they already have remaining performance obligations, investors can be reasonably more confident that the company will hit these targets and hit these numbers. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.